Hi everyone, very good afternoon to you. Charles here with Fairground Daily Chart Analysis, Thursday, 13th November 2025. And we're just approaching 3 o'clock in the afternoon in Milano, so that's 2 o'clock UK. And I figured this would be a nice example to go over the difference between a good position and a great position, and why taking either or is not necessarily a bad thing in terms of if you're going to take a good position. It's just vitally important you know what you're trading into and the confluence that you're using in order to take a good position, opposing to awaiting for a great position. So the contrast there is that taking a good position, does that necessarily mean you're impatient? Does that mean you're not necessarily following your plan? Or does that mean you have an array of setups of which, if the criteria meets, you're more than happy to take either or, so long as I say, you know that you're trading with additional confluence? So this is a grand example. GBP USD, I have just finished closing that position out, and talking to a person that I mentor, of course, I am encouraging great position trades in order to gain the confidence required to then push forward, to then have that confidence to take not only great positions but also good positions. That again, that does not necessarily mean take impatient trades. That means take positions that will still align with your strategy, but they're simply not perfect. So in the manner of taking a trade that doesn't align with perfection in terms of what you are waiting for, the variables, of course, that we can control is our risk appetite. So as opposing to me risking 1.5% on, let's say, a great trade, in this element, I'd be risking 0.75% on a good trade, because I know that that percentage play is against me in terms of a good trade and a great trade. Now let's get into the breakdown. So I was using GBP USD and looking at the correlation between that and also Euro US dollar at the same time. So at the time of taking the position on GBP USD short, price had come into a wick imbalance area of the 1 hour. So I'll give you that now to have a look at. So as you can see, a previous wick imbalance was created and price tapped into that area on Euro US dollar. Now, at the same time on Euro US dollar, there was not an entry for myself. The entry that I'm still waiting for on EU is for price to tap up into this area on the 15-minute and find ourselves that lower time break of structure before going short for what I would describe as a great position. However, with that said, I'm of the knowledge that wicks get filled. And if you just look at basic price action, let's take that as a higher high, higher low, higher high. And here is our area of interest that we are seeking to be broken. So in that element, this was placed here as a structure point. Now, that structure was then broken to the downside and it pulled back into an area of that wick imbalance created on the 1 hour time frame. So if it wasn't for this 15-minute order block left up at the highs, if it wasn't for Asia highs to be potentially filled, and if it wasn't for this 4 hour wick also to be tapped before looking to go short, I would fully understand a short position in and around this area on Euro US dollar. So how that then contrasts is then as I go across to GBP USD, one to the lines, let's show you how the chart then aligned in terms of looking for short positions here as well, giving us the go-ahead essentially to accepting the fact that we're happy to take a good trade. So the fact that we were considering that Euro US dollar would look good for shorts, but for there isn't an entry set up on that pair just yet. Across the GU we went. Now, as you can see from my two illustrations, a great trade would be to wait for this area to be broken, the pullback into the imbalance left behind, and then the short. That was what I would describe as a great position, considering we were also waiting for EU to push up before the rollover short. However, in terms of then looking at taking what I would describe then as a good trade opposing to a great trade, that is simply subjective on where you place your structure. Now, if you call this the higher low area, higher high created, this is evidently a break of structure. Pull back then into imbalance before then looking for the short rollover, of which I took the short position from this area, 6 pip stop loss I believe, and then we was targeting simply a 1 to 3, which was achieved just by this area here, not a structure point, that is more so there. So I hope you can gauge now that when two pairs are correlating and they both look good for the short setup, however you can't find an entry on one of the pairs, but you can understand why price would look to roll over short. This is a great example of why you are able to take a good trade on the basis that you are aware that it is just that, a good trade and not a great trade. Let's say, for instance, now looking at GU as it comes back up, of course now this is shaping up perfectly for what I would describe as a great trade, because we have had that solid break of structure on that 1 minute time frame, and no doubt on the 5 minute you'll see the representation as well. Not only that, we are in that higher time frame point of interest. Another reason why I was happy to take the short position initially. Now, what we must understand is that we are creating higher highs, higher lows, and as we get back up into this area, this could be not necessarily for the tap short. This could simply be an area of which we're making a higher high. So we will also need a lower time frame break of structure in and around this area at the highs before looking to go short. However, with that said, most importantly, the intention of this video was to indicate and show where you have two contrasting and correlating pairs, that of course a short position would make absolute sense here, so long as of course you could execute it in a manner like so and not like this. So you must trust your analysis. If you were to do something like this, then of course that is not worth your while. You are not accepting the risk of your trade. However, if you were simply to cover the order block that you are aware of, allow yourself the range to get break even, then of course, again, in terms of taking a good position, you have accepted the risk that there is most certainly reasons in which you could lose this position. However, in light of being at that wick imbalance, in light of there being a break of structure, a pullback into a valid area, then of course it's understandable why you'd be happy to take a good trade and not always necessarily wait for the perfect setup. Thank you very much for listening. My name is Charles of Fairground Daily Chart Analysis, and I hope that helped. Do take care.